Hello dear students. So myself Prithvija. Today I am going to discuss about a second chapter in advanced accounting called accounts of life insurance companies. As we discussed in the earlier chapter called banking final accounts, it is also very important for your 40 mark and 6 mark as well. So how many questions they can ask in insurance companies means in section B they are going to ask one or two questions. There will be one question must, and in 40 mark they are going to ask two problems for you, that is one in life insurance and one in general insurance. So there are several type of insurance you might have heard, like cargo insurance, fire insurance, theft insurance, vehicle insurance and medical insurance. Even though if we have different types of insurance types, in actually advanced account syllabus they have concentrated only on basically two chapters. One is life insurance and another one is general insurance. So you need to prepare final accounts of insurance, life insurance companies and accounts, final accounts of general insurance companies. So in general insurance companies final accounts, you need to concentrate on two types again. That is one is mm, fire insurance and second one is marine insurance. So first we'll move on to a first concept of insurance companies called as life insurance companies. So let me discuss first a meaning of insurance. So this one you have studied in maybe IFS or business studies in PUC level might be. So even though I'm going to explain you the definition of insurance, actually it states that it is a contract between two parties undertaken in consideration of certain premium to other against certain amount of loss arising. See here, there is a contract, there should be an agreement, there should be a not agreement, there should be a contract between two parties. One party is insurer and one party is insured. Insured is a person who is paying a regular premiums, and insurer is a company, that is insurance company, who is going to collect a money from insured in the name of that is premium. So there are two parties existed in one insurance business. So contract between two parties undertaken in, so it is undertaken for consideration of certain premium. So here consideration given by the insured to pay at one certain period as certain amount called as premium to other against certain amount of loss arising. So by the time if you pay, I mean like if you are insured, take an example, you are insured, you are taking an insurance premium means, I mean insurance policy means you need to pay premium for certain period which is fixed by the insurance company. So after that, after expiring that time or else after you are getting a loss, insurance company is going to compensate you. That is what certain amount of loss arising they are going to pay. Insurance company is going to pay for the losses beared by losses occurred to the insured person. So this is what insurance business says. There must be a contract and between two parties, and certain premium paid by insured and against certain amount of loss arising. So on loss arising itself, insured is going to pay certain amount as premiums. So this is what called as insurance meaning. Next, what are the types of insurance we have? It is broadly classified into life insurance and general insurance. Life insurance, maximum they are going to ask only 40 mark. In general insurance there will be 6 mark and 40 mark both question. Next, if you want, if you so after the classification of insurance, so accounts of insurance, life insurance companies. What is the form of preparation of accounts in life insurance business? That is, accounts are maintained under two types of books: statutory books and subsidiary books. Just you just mention there are two types of accounts can be maintained in life insurance: statutory books and subsidiary books. Statutory means there will be rules and regulations, policies, and subsidiary books means different types of books they are going to prepare. So here out of that the important concepts are reinsurance first. When an insurance company, what do you mean by reinsurance? See, logically I'll just explain. Sorry, logically I'll explain what do you mean by reinsurance. See, insurance means for compensating one person by the other, insured is going to pay the premiums and insurance company is going to collect the premiums, and at the time of the loss occurred to the insured, insurance company is going to pay. That is actually called as insurance. But here reinsurance is what? You just assume there will be three parties. One is A insurance company, second one is B, that is insured, a person. There is again C called as insurance company, second insurance company. Now A is one insurance company, C is second insurance company, B is the person who took insurance from A company. Now to pay the loss by the A insurance company, if he found any difficulties, means if he don't have any money to pay to the B at the time of his losses, means what he will do, he will consult bank C, he will consult insurance company called as C, and he will ask C company that I will pay premium for you and you can give insurance policy for me. So that here insurance company is going to take a insurance policy in another company to compensate the losses of the persons who are paying a premium in their company. So here A is also insurance company, C is also insurance company. To cover B losses, A don't have enough money. So what he will do? He will take insurance policy from another company called as C. So that is called as reinsurance. Let me see the meaning. When an insurance company accepts a business of more risk, passing on a part of insurance risk undertaken by one insurer to another insurer, or one insurance company to another insurance company to reduce its risk, that is called as reinsurance. This is what I told. Next, reserve for unexpected risk. Here also there will be reserve for unexpected risk. It is amount of reserve maintained by general insurance business houses to meet any possible liability of risk in respect of those policies which are not yet expired at the end of accounting period. Yeah, let it be. So in the next classes I can explain you the things. So you just read out the words. You have surrenders, surrender value of life policy, reinsurance accepted, reversionary bonus, reversions and bonus. So you have a video, you can copy the notes. Next, you have annuities, claims, bonus in reduction of premium and commission. See here it is mentioned as wrong. Claims in reinsurance created, it is not created, ceded, C-E-E-D-E-D, ceded, and claims on reinsurance accepted. I'll tell you what are the treatments for that later on. Next, come to directly accounts of life insurance. So this is the important part you need to understand. Not only life insurance, accounts of insurance companies. All the companies are required to, all insurance companies are required to prepare their financial statements, that is under revenue account, profit or loss account and balance sheet. There are three statements to be prepared by individual insurance companies. Either it is doing life insurance business or it is doing general insurance business. Even though they have to prepare three types of statements. Revenue account is also statement, profit or loss account is also statement and balance sheet is also statement. But according to IRDA, Insurance Regulatory Development Authority of India, IRDA, Insurance Regulatory Development Authority, Regulation Act 2002, Schedule A of regulation gives the following forms. So as we saw, that is schedule number 3, section 29, there will be two forms, form A and form B in banking final accounts. And here also similar, it gives the following forms, means there are three statements: revenue account under form A, profit or loss account under form A, balance sheet under form A. Next, according to schedule B, it gives the following forms of general insurance accounts. There are three again: revenue account form B, profit or loss account form B, balance sheet for form B. See, simple. It is for life insurance and this is for general insurance. In case life insurance problem is asked, all the three statements to be prepared under form A. In case if general insurance is asked, all the accounts to be prepared under form B. Clear? There are two types. This is for life insurance and this is for general insurance. Next, accounts of life insurance companies. So accounts of life insurance companies, there are three statements required to prepare, but for your examination purpose they have sorted out one. In preparation of final accounts of life insurance business accounts, we require to prepare only two statements out of three. They are, one is revenue account under form A, second one balance sheet under form A. There is no form B for life insurance and there is no form A for general insurance. Please don't ignore. I'll repeat again. There is no form B for life insurance. There is no form A for general insurance. So that it is clear, form A is required to prepare only life insurance companies accounts and form B is required to prepare only general insurance companies accounts. Clear? Yeah. This is called as a theoretical part which is required to study. Please copy this in your notes for the second chapter theoretical part and we'll continue in the next class. Thank you.